Hello everybody, Will Hustle here once again for your weekend review and look ahead. Had a pretty rough week in the markets, not just me, but it seems like everyone was. As I have up here a chart of the Dow Jones ETF, the S&P, the QQQ, the Nasdaq ETF, and the S&P ETF. As we can all see, looking through all these individual charts, that we had a pretty strong-ish week, and then pretty much collapsed on Thursday and into Friday, pretty much leading into a 2% correction across the board. Some people wanted this kind of correction-y, capitulation type thing. Some people want this market to continue to go down. Yes, I got the exact numbers right here. Nasdaq was down 2.15% on Friday. S&P was down 2.09%, and Dow Jones was down 1.96%. The VIX was up a paltry, well, not a paltry, but 36%, 31.74%. See if I can get an actual chart of the VIX. Here we are. Look at that massive move that happened. It's, volatility really got up there, and spiked because of the moves that people were making. Let's shift this back to the QQQ. All this pretty much got started because of the Chinese PMI number showing that there is weaker growth in China, and along with that, some emerging market currencies have been showing some weakness as of late. So there's been fresh concerns about the growth of emerging markets and the development and investability into the emerging markets. And that's pretty much got everyone really scared, because apparently the emerging markets have had a very good the extra liquidity that the Fed has been giving out in terms of QE3 has been very good for emerging markets, and since we are starting to cut back on that, there are those concerns that emerging markets may not do as well. I'm looking into the chart of the Dow Jones Industrial Average. It fell below all of its key moving averages that we see here. Same with the S&P and with the Nasdaq. Other than the Nasdaq on Thursday did try and go and get a leg up a bit more than the S&P and Dow Jones did here on the sides, but nonetheless, they all ended down off of their all-time highs, off of the highs that we've been seeing, and this has kind of been, I don't know, I didn't really expect this move. I kind of expected a couple more days of kind of trial and tribulation here in the markets, just kind of like the S&P chart shows right here, which is just kind of, a little meandering. Looking into the week ahead, some very big news that I think that I want to cover first is that the Fed is looking to see if they want to cut another $10 billion off of the now $75 billion a month purchasing program. They are expecting to announce this cut in the January 28th to 29th meeting, and it's the last meeting that Ben Bernanke will be chairman of, and that meeting will be from Tuesday to Wednesday. The street is expecting another $10 billion in tapering, but it seems fresh concerns about the debt ceiling could cause a halt to that taper cutting, which Secretary of Treasury Jack Lew mentioned in Davos. He told us that Congress is starting to exhaust its borrowing powered by late February if lawmakers don't act. Earlier, the deadline was put at March, but it seems to have, people have been spending a whole lot more, so we're looking at February instead of March. Some big earnings. First, I'm going to start off with earnings. We've got on Monday Apple and Caterpillar, which I think are both going to be big ones, especially Caterpillar. And then on Tuesday we have Ford. All companies that kind of give you a gauge on the consumer and stuff like that. Then on Thursday we have Amazon, Google, and Visa, which I am long, and I'll go through that later on in the video. Some of the economic data that we will be seeing is on Monday, December new home sales. The estimate is 457,000 versus the last period of 464,000. Then on Tuesday we have December durable goods. We are expecting 1.7% versus 3.4% of last period. January consumer credit's also coming out that day. We are expecting 78.8 estimate versus last period of 78.1. And then on Thursday, and this is a biggie, we have the first kind of taste of Q4 GDP. This is going to be the first estimate, and it looks like the consensus estimate is going to be 3.3% growth versus last period of 4.1% growth. Last period we did have a very, very, very large GDP growth, so that's going to be the first prediction. We will see exactly what it comes out to, though, on Thursday, so that's going to be a big day. And then Friday, we have December personal income numbers. We were expecting 0.2%, and the last period was 0.2% again. For December consumption, we are expecting 0.2% versus last period of 0.5%. So, that goes along with the theme of, December wasn't that good for shopping. Then we also have January Chicago PMI. The consensus estimate is 59 versus the last period of 60.2. And then we finally have the January Michigan Sentiment, which is the University of Michigan's Consumer Sentiment Index. And we want to see it at 81 flat versus last period of 80.4. So a little bit of a rise there. And then also just a little bit of news I would like to go and address is on February 1st. That is this next Saturday. Janet Yellen will officially become the Fed chair. She will take over Fed chair, and she will be the first woman in history to do so. Hopefully she will be a good Fed chair. I have no reasons to doubt that she won't. Going over my portfolio here, probably my most disappointing stock that I'm in right now is AIG. It's really, really, really started hitting me hard. I'm thinking about just cutting the position overall and not even thinking about it long term, just because of the hate, just because of the hurt that I'm feeling. Although I'm doing the same with Visa, although I'm going to wait for earnings on Thursday just to see, because I do expect them to beat. But first off, we're looking at JPM. It seems like all the financials are really weak this week. JPM finished below all of its simple moving averages here. I'll go and throw up a chart of some other financials. Here's Citigroup, once again, weak. GS, weak. And then they finished above their 21-day. Morgan Stanley, weak, but did kind of put in a nice little bottoming range right here above its 50 and 21-day simple moving averages. But overall, JP Morgan, not a whole lot of news came out for this stock. It's just been kind of getting hammered as of recently, ever since it hit this high of almost $60. It's just been going down, which I can respect. And they're pretty long term. So as long as the stock goes up at the end of the year, I'll be fine. AIG, really no news is coming out of AIG. as of recently, and I think it's a terrible thing, because it's just been going down pretty fast as we are below $50, and $50, as I've explained in past videos, is a pretty big support level and resistance level. As we look up here on this chart, $50 was a huge battleground for a lot of months, and now that we're below it, it's a little bit concerning. If we hit this kind of $47, $13, I'm gonna have to probably get out and look to get in at a cheaper price. But yeah, it's been undervalued, still is undervalued. I wish I could buy more. I am stretched as I am capped. I have no money, almost absolutely no money to go and buy any stocks with. As you can see, my balance is $65 and just kind of available funds to trade with. So I wish I could buy some, but unfortunately I can't. Although I am thinking about selling Visa in order to get some capital. Actually, let's go into Visa. Visa, they are reporting on Thursday, as I mentioned, and we are looking for a $2.60 beat on earnings, meaning that they will get $2.16 on earnings. Although I have seen whisper numbers in the $2.20 range to $2.23 cent ranges throughout this. Really don't know why this stock has gone down as of late. Probably just with the overall markets, as it is a Dow component. But on last Friday, it had that huge jump that I talked about on really no news. I expected a little bit of. I actually expected a lot of sell-off on Monday and Tuesday. It didn't really happen, and then it just kind of got sucked down with the Dow. Really, when looking at this 5-day chart, I kind of like the 5-day chart because it shows this 200-day moving average is kind of really just this huge arc that it's been doing. It actually broke through the $2.23 that we have been talking about repeatedly on this stock when we look at it on a larger time frame, that I've been really trying to get through that resistance for some time now. It kind of just melted through there like butter. That's what you saw, this big sell-off right over there. These kind of cascades going down was when it reached that resistance level, and I've been seeing some people saying that this is pretty bad for Visa, technically wise. Looking at the chart, it's kind of ugly. Although, looking on StockTwits, it is 96% bullish and 4% bearish. Although, I've been seeing some people saying that we're going to go down to 215, 217. Although a lot of people I have also been seeing have been buying the $233 calls, and that is, again, as we mentioned, the resistance. That is that big resistance point. So kind of hold on till earnings, and if earnings are bad, then we're dumping it. I have made a pretty nice profit ever since December, 8% or $66. It was closer to 9% at its all-time high, and it was over $100. But what am I going to do? Coors set to go and release its earnings next month. I won't go into the earnings that much, but continued on from last week's Friday's channel check numbers with relative strength. There's that Friday that we were talking about. With relative strength, they're just going to move into the week as a powerhouse. Really, no one really knew why. I didn't even know why on Thursday either. And on Friday, it kind of sunk down along with the rest of the stocks, but it wasn't nearly to the amount that some of the other ones were. It was only down 22 cents. which was also 0.25. 0.27%. So when you look at that compared to the overall markets, it's not that bad whatsoever, and especially since people have been talking about retail slowing and stuff like that. I actually think it kind of got boosted on the Starbucks numbers, even though I don't know why it was up all that much on Wednesday. It's kind of making a beautiful chart pattern, especially when I look up here just on Friday, just went straight down to that 200-day moving average and just bounced completely off of it. Hasn't broke the 200-day moving average since here, and that's when we saw the big. It's just been kind of painting on it, and it's been looking great. Looking back over here, just kind of finished below its moving averages, but it's about to touch on that 200-day moving average, and I think we'll see it bounce back like we did earlier on Friday, and it did trade in profit up here. It was trading about a percent gain, which was the first time it's really kind of broken 80 in forever, it seems. Here, let me go into a daily, multi-month chart. Yeah, when you look at it, it's the first time it's broken 80 since the beginning of the month. So, if it can stay above 80 for a couple of days, I think it'll be good. I think there's going to be a big run up onto the stock and into earnings, though. Although I'm not going to go into earnings. But yeah, Michael Kors has been seeing some nice action lately, and I think the fact that especially since the fact that it was up in the middle of all that kind of downwardness, and on Friday it really shows that it can go and do some good out there. Michael Kors, I am in profit in Michael Kors. It's kind of weird. Michael Kors goes up, the rest of the market goes down. Who knows? $32 profit right now. So liking that. And then last but not least, Starbucks, which had a fantastic earnings beat. Howard Schultz went in said, everything that he saw was pretty much in line with the company. Oh yeah, on Michael Kors, there's 100% bullish sentiment on the stock right now, on stock twits. Starbucks, there's a 77% bullish sentiment. It had a really, really nice, some people are saying it's fully priced and stuff like that. It did avoid the sell-off on Friday, although it kind of gave it a little bit here, with that kind of down, would move towards the end, but it really the earnings really got it out of the hole that it was digging for itself. And looking up on a multiple day chart, it seems 76 is going to have to be the number. The looks like a fairly looks like it was kind of contested a bit, so that's going to be our resistance point for the next couple of days. Hopefully, can get above 76. But I think we see some good numbers from Visa and Kors, just because they also represent the consumer. That we will probably see Starbucks go up again. It did have a really good China quarter, although this is kind of ironic because it was the same day that China PMI was showing some weakness in China, but it seems the Chinese consumer really likes Starbucks. So yeah, I think that's gonna wrap it up for me. Not a whole lot of other stocks I'll get into. You know what? I'll do Ford, just because it's kind of an earnings play. So, Ford's been kind of choppy, if I remember right. I don't really follow Ford too often. It's going to go off of those good auto sales that it has been having. It's going to be an interesting one to go and see when it does report earnings, to kind of get a good kind of gauge on the economy, despite some of the other news that we've been hearing out from the numbers. Let's go into Apple, stock that everyone likes to talk about. 555. It's just the level that everyone's been trading at for forever now. In Apple, probably one of the more boring stocks to trade. as of now, let's look at a yearly chart. Yeah, it's just been kind of range bound all through here. Icon, drama, and all that stuff. I can't really get too hyped on it, as some of you guys may know from watching my videos. I'm not a huge fan of Apple when it comes to their products, especially since their huge new thing that they've come up with is a bigger screen on the iPad. Oh my god, that's so innovative. Steve Jobs is just thrilled in his grave now, isn't he, that you're going to take the iPad and just put a bigger screen on it. I don't really see Apple, they're probably going to beat, they normally do, and this is normally when we get to go and see just how big of a cash pile they have on hand once again. That to me would be very frustrating as an investor to have all that cash on the side as you watch your stock price pretty much do nothing for the last couple months. And I do think Carl Icahn has a point that that cash should be either going to the investors or should be going into more R&D and not just sitting there. But I don't want to get too much into that type of a thing. What I feel like it needs to be in for Apple, so I'm going to wrap it up here. I'd like to thank you guys for watching my videos, for following me on StockTwits, that's at Will Hassel on StockTwits, and for following me on Twitter. I've had a large number of people follow me this week and have conversations. Like always, I love talking to everybody, so please, email me, tweet me if you have any questions, comments, or if you just want to talk markets. I'm more than happy to talk with you. So yes, thank you. I got to 160 followers on Friday, which I'm very happy about, and I will see you guys next weekend.